Hello everyone, welcome to Economic Impact. Today we are November 12, 2025, and as usual I am with our chief economist Stéfane Marion. Stéfane, once again we need to talk about Canada versus US, but rate cuts now.
There are so many things we want to speak to Denis today, but let's start with the rate cuts because that's your specialty as a former head of fixed income. So yes, monetary easing cycle continued in Canada on October 9th. It was the 9th easing rate cut since the beginning of the cycle that started in the summer of 2024. We spoke last month, could there be more? The Bank of Canada was cautious on this one, Denis. It says, I'm giving you one, but I think rates are neutral, and I think I might be done for this easing cycle. So there's a considerable gap that remains with the U.S., to reflect some of the challenges that we face on this side of the border. But it seems that the Bank of Canada is comfortable now saying, well, maybe monetary policy is where it should be.
Now, do you think it's unusual thinking that the rates will not go lower considering what we see in the economy right now?
I would have thought so, like you, but the surprise in the Canadian economy over the past 2 months is the uncanny resilience. So the service sector in Canada, which is the biggest chunk of the Canadian economy, is indicating growth for the first time in 9 months. Right? And the manufacturing sector is still showing contraction, but nowhere near as bad as what we saw. So it seems like the Canadian economy is stabilizing with growth. It's not a boom, Denis, but it's better growth than we had forecast. So you could justify the Bank of Canada's message based on the recent evidence that we're getting from economic reports.
And this is also what we get from the unemployment number, which was a big surprise.
Well, these surveys are meaningless if you can't confirm it with real data. And the real data shows that we've had some job creation to the extent that good enough to the extent that the unemployment rate actually edged below 7% for the first time in a few months. And more importantly, the wage inflation is growing at roughly 4%, which is above inflation. So that means that there is purchasing power at the consumer level that could help stabilize the Canadian economy, despite the fact that the export sector remains challenged.
It's quite interesting seeing that, because this is not the perception we have when we're listening to the news. It's very negative compared to the results here. You're
right, and if you look at the, there's been an announcement that Ottawa is thinking about reducing quite significantly the size of the civil service in Ottawa. But having said this, what's happening in the private sector in Canada shows, again, this resilience. So notice in the U.S. the trend on private sector employment. This is a private survey, Denis, because as you know, the government is still shut down, reopening, but it's going to take time to get the official data. But the private sector suggests this downtrend in U.S. employment growth. Canada's more volatile, so I can't say that we have broken the trend with the U.S., but clearly in the last month we did. So again, that just speaks to some resilience in the private sector, because the earnings season was better than expected on the S&P TSX. So that would be reflected on employment. So private sector holding up relatively well at this point in time. Again, suggesting that the BOC, the Bank of Canada, might have been justified to saying, well, maybe we've done enough.
Now we have the reason. And now we have to talk about the budget in Canada, because we spoke about it the last time. Now it's done.
Yeah, so we spoke last month. Okay, so one of the reasons the Bank of Canada says, well, I need to pause now is because, we are getting fiscal stimulus in Canada. Maybe the budget was not as transformational as we thought it would be last month, where we were arguing for a $100 billion deficit, 3% of GDP. It came in at $80 billion. So then close enough to say, is it a structuring budget? I think it is, because if you look at the composition of the spending for the years ahead, look at these blue bars. This is investment. This is not just spending that just goes to consumers and then that disappears in the economy through some import leakages. Absolutely not. This is a commitment to invest in the Canadian economy and to start to reindustrialize the country. So notice that on the operating balance, Ottawa says, well, we'll be in surplus in 3 years from now, but we are committing roughly $280 billion to investment in the Canadian economy. So Denis, that is structuring.
And this is how you build confidence in an economy, when you see that amount of investment, which are not expenses, which down the road will produce revenue.
Yeah, so you're going to run a 2.5% deficit as a share GDP this year, but the commitment to skew it towards investment means that investors are unlikely to say, well, we don't believe in your story. They're going to say, well, okay, finally. And it's not just the spending, Denis, it's also the commitment to reduce the substantial amount of regulation in this country, and also, importantly, to say maybe assets will be available for these pension funds to buy into Canada. So, in terms of positioning this budget, I would say it is structuring. So we spoke about that last month, and that was important. And I think that they went in the right direction. Now, there's a few things that need to be settled, among which, trade negotiations with the U.S. need to resume because that stopped since last time we saw each other. So, but again, it's certainly a big step in the right direction.
And that's new pictures to see deficit probably translate also positive on the stocks, in the equity market, because we're not at new high, but we're doing quite well.
Well, the performance this year has been stellar. I mean, more than 20%. Last time we saw that was 1993. By the way, that's the last time the Blue Jays won the World Series.
Well, we were close this year.
You were very close. but we did more than 25% in 1993. Okay. So we didn't win this year, but maybe, more than 20% is great. So aside from the Blue Jays, there's the fact that, again, this budget is credible, and if you cut regulations for corporation, that means that you will help profitability down the road, and that's more sustainable for the Canadian economy. We need to bring investment back to Canada. It's making Canada investable again. And I think on that side, the budget was important for investors. So a lot of good news already priced in. I can't promise you a repeat performance next year, but this proves that the budget was relatively well received. Now it's a matter of execution.
Yeah, exactly. And we see also that the Canadian dollar are fine, kind of we saw the bottom, but now I think it's above 70 cents. It's natural that he's there, that the Canadian dollar is there.
No, you're right. And since the start of the year, we've seen the Canadian dollar depreciation. Our forecast is, we might go to 142. You can see we went to 141.5, which is close enough to 142. I think you'll agree with me. Now, have we found the cruising altitude? A key condition to finding the cruising altitude for the loonie was this budget. So the budget is credible. Now, what we're missing is the budget was necessary, but not sufficient. Now we need to execute on bringing deregulation, but also restarting these trade discussions with the Americans to have the full impact of the budget. So again, not out of the woods, but I think we're starting to find a cruising altitude. So there might be more side for Canadian dollar appreciation in the quarters ahead.
Well, thank you, Stéfane. And thank you, all of you. Today is my last presence on the stage. I would like to thank all the people, the investors who are listening to us, and the positive comment that we get and we had. Very, very helpful to make that capsule better and better every day, hopefully. I would like to thank also all the people here who make that thing happen. Spectacular team, all the technicians and the people around the stages are fantastic. And Stéfane, thank you very much for let me do that for you for the past 2 years or so. It was a lot of fun, a lot of pleasure, and long life to economic impact.
Denis, if I may, I just have to thank you for the 35 years you spent at the bank, and I would just want to say it was a privilege to work with you. So thank you very much.
Goodbye.